Hi, welcome to another episode of Talking Tax with Alex. In this week's episode, we're going to deviate again from the normal review of a court case and evaluation of the issue in the court case or an issue or issues of the court case. And I'm going to talk about a recent development in the tax world for something that I think is going to linger and become a pretty big issue for employers. Of course, I'm talking about the employee retention tax credit. So this has come up in my practice, and I figured I'd shoot a quick video to just share a little bit. I'm not going to dive into that much, like the specifics of the tax credit, but what prompted this video was the IRS actually issued a warning because there's going to be a lot of fraud that's actually going to be filed in this, and it kind of it's kind of in theme with our series of looking at the Department of Justice and the IRS going after tax fraudsters and cheats. This is going to happen in real time. So the IRS has already issued a warning of sorts for employers and anybody who might file to claim the ERTC. And I'm going to spend this episode just talking about something that came up in my practice. Hopefully you find it useful. So the Employee Retention Credit, the ERTC for short, and I'll be using the ERTC as an acronym. A brief history is on the slide. It was introduced by the CARES Act, which was enacted in March 25th, 2020, a couple years ago, right at the onset of COVID. And it's been modified a few times through the years. It's modified by the Relief Act of 2020 in December, by the ARP Act of March 11th, 2021, and then the Infrastructure Act again in 2021. And ultimately, the ERTC is available for filing until April 15th of 2024. So what's this all about? So obviously the ERTC doesn't apply to anybody who doesn't have a business or who do not have employees. So if you don't have a business, you don't have employees, this video is not for you. If you do have a business, you do have employees, then this video hopefully will get you thinking about certain things. And that's in my niche of practice. I deal with business owners, and so this is very relevant to what I do on the day-to-day. So what is the ERTC? In short, like I said, I'm not going to go into the specifics of what qualifies or how much, but it does actually quantify to a sizable portion if you do qualify, and that's why it's being scrutinized so much. I think it's about $10,000 per employee per quarter, and that for 2020, and then $7,000 per employee per quarter for 3 quarters in 2021. There's some specific requirements, kind of loosely put here. If you are an employer who had employees and you sustained a full or partial suspension of operations due to COVID, government shutdowns, state mandated shutdowns or something like that, or if you experience a significant decline in gross receipts from 2020 and 2021, then you potentially are eligible for the ERTC. There's also a small section for recovery startup businesses. I don't think that really applies to a vast majority of people, but if you started a business during 2020, 2021, you could also potentially qualify for third and fourth quarters of the credit. So the purpose of shooting this video is, like I said, not to go into the specifics of the ERTC because it's actually very complicated, but it's really to kind of relay a warning. The IRS issued basically a newsroom publication. In short, I linked it here in the video, and I'll link it in the description as well. But this is just kind of the opening sentence of the bulletin, and the IRS is warning employers to be wary of third parties who are advising them to claim the ERTC or ERC when they may not qualify. And some third parties are taking improper positions related to eligibility for and computation of the credit. So why this is important is because if the IRS is, and this was, a couple days ago on the 19th, if the IRS is already aware of third-party vendors being very aggressive and marketing this, and this kind of, this narrative reflects my experience in my practice as well. I have a lot of clients who are talking to me and telling me, "Hey, Alex, I've been solicited for this vendor, this vendor, this vendor are offering to file my ERTC for me, and they want X%. It's they're a little bit wary, but the numbers are so tempting that and given the language of who qualifies, almost everybody can almost say, hey, I think I sustained a partial suspension of operations. Like, what does that even mean? Like, and again, I'm not going to go into the specifics. I know it and I'm doing it for clients. If that's something that maybe I get feedback on, I can shoot a video, maybe and go into more detail. But again, my purpose of this video realistically is just to kind of relay this warning, this newsroom warning from the IRS. And why the IRS is warning this is because they know that they're still catching up from all the other COVID law changes, the stuff that we as taxpayers might just kind of hear about casually on the news. There has to be a whole government agency that's all, has to be in charge of putting this in place. The stimulus payments, the advanced child care tax payments, all the stuff that Congress kind of just passes, the IRS has to implement and enforce later. And the problem with the ERTC is there's very little guidance from the IRS right now. From what I've seen, I've been able to acquire, the audit requirements that the IRS is going to start using to audit these, and knowing and having seen that now, the audits are coming for these credits. So when you're filing for this, or if you're being solicited and you decide to go with a firm, you have to be really careful about who you're selecting to file this credit for you. And unfortunately, since the money is so good and it seems like it's such a wide criteria and there's no guidance, third-party vendors are basically just taking what we saw in the previous slide, saying, oh, you qualify, you qualify, you qualify, everybody qualifies, and they're not going to make a strong case for the qualification or have the necessary documentation to support it. And why they're doing it is because they're going to charge an upfront contingent fee that is based on the percentage of what you get. So the difference between like a CPA and a third-party vendor is a third-party vendor can just say, hey, your credit's going to be $300,000, I want 25%, regardless of how much work it takes to actually do that. So you can already see, like, if a third-party vendor is just going to say, yeah, you qualify for $300,000 of payroll, payroll tax, payroll qualifications, and that yields X dozens, thousands of dollars of tax credit. We want 25% of that. They might only spend, maybe a day or two of work. So, and they don't have to be CPAs to do it. They don't have to be qualified in any way. They could just tell you whatever they want. They could put up a fancy website. That's why you have to be really careful on who's doing this. They don't really need to have any qualifications. And in that same vein, if they charge you an X%, it really is just depending on whether you meet the criteria in their determination, and then you pay them up front. Why is that a problem? Well, you pay them up front. And these audits are not going to happen until the IRS kind of catches on. I mean, they're already letting everyone know that these are coming, but the audits are going to happen in a year, 2, 3 years from now. And the statute of limitations is open for 3 years after the deadline, which the deadline is April 15th, 2024. So, audits are going to be happening till like 2027, 28. This is a long time. Like this issue is going to be here for a long, long time. So that's, if they're paying upfront that fee, then you don't even know if this company is going to be around in 5, 6 years, right? Who knows? And so that's where it gets really dicey. Because you don't know who to trust anymore. Finally, there's also this other little wrinkle in here where there's an additional income tax filing requirement that you have to do when you file this when you file for the ERTC. And third-party vendors, they're not CPAs. They're not going to be able to know, or they might know. Maybe they don't. You don't know whether you need to file you have an additional income tax filing requirement. They can't probably do it for you. I mean, they might have an enrolled agent. Maybe they can. But they might not be CPAs. So it kind of creates a very weird environment and an environment ripe for abuse and fraud, and you can kind of see the elements in play here, and that's why I think it's important. And I just wanted to shoot this video. It's very contemporaneous to my practice right now. So my closing thoughts, and again, my reason for shooting this video is I've seen this come up in my practice. I think this is important for anybody that's considering filing for an ERC claim, that they consult their tax advisor for more information. You can leave me a comment or send me an email. I might be able to, I can't consult you on your specific situation, but I might be able to answer some general questions or something. But realistically, I just wanted to pass this knowledge around and see if anyone could make use of it, and let anybody who's contemplating it or being pushed to file to maybe have a second thought. There's a lot that actually goes into it, and it does sound very lucrative if you do qualify, but I think the risk is on the back end, making sure that you're ready for an audit, because these are going to be super hot. I know that they're going to get audited to a very high degree, and we're just embarking on that leg of this tax development right now. Like it's just starting to happen. The audits are going to go for the next several years. So that's all I have for this episode. If you like this video, if you like this content, like the video, subscribe to the channel, comment or email me your thoughts, and maybe I can do a content video that goes more deep into the ERTC than this episode, which is more of just a general knowledge kind of thing. So thank you for watching. I'll see you next time. Bye-bye.